Today, FTX executive Gary Wang testifies in Sam Bankman-Fried's trial. And former federal prosecutor Paul Tuchmann discusses possible defense strategies for SBF's lawyers. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies mixed to close out a week dominated by courtroom intrigue. Bitcoin did make some solid gains over the past 7 days, though, rising just about 4% and trading back around the $28,000 level it briefly crossed on Monday. Ether, meanwhile, is down about 1.7% for the week, despite a flood of Ether-focused ETFs that hit U.S. exchanges. These were widely expected to be a positive catalyst for ETH and crypto broadly. I spoke to Connor Ryder, head of research at the stablecoin company Athena Labs. He called the ETF's start of trading underwhelming, with less than $2 million in trading volume on the first day across 6 different ETH futures ETFs. That represents about 0.2% of the trading volume of Bitcoin futures ETFs on their first day of trading. The weekly performance of both coins gives yet another glimpse into the crypto market's struggle this year, where potential catalysts take price action only so far before the low volume and liquidity regain control of the market. For that, investors have the ongoing regulatory uncertainty in the U.S. to thank. Now, comparing to Wall Street, Bitcoin is outperforming the S&P, which is on track to gain about 0.25% in this first trading week of October. U.S. markets have wrestled with the turmoil on Capitol Hill and a spike in Treasury yields, which hit their highest levels since 2007 earlier this week. Investors trying to shake that off this morning after the September jobs report showed way more people were hired than expected. That good news today has the S&P on track to outpace Ether. Okay, let's talk about the latest in the trial of Sam Bankman-Fried. Gary Wang, SBF's childhood friend and part owner of FTX, has already pleaded guilty to crimes around the collapse of the exchange and is appearing in the trial as part of a cooperation agreement with prosecutors. Wang told the court that he committed financial crimes, and when prosecutors asked who he committed the crimes with, Wang claimed it was alongside executives Nishad Singh, Caroline Ellison, and SBF himself. He also told the court about the special privileges for Alameda that were coded into the platform, which allowed it to rack up an $8 billion liability. Those special privileges included unlimited withdrawals from the platform. Wang's testimony came after the court heard from Matt Huang yesterday, who's a managing partner at crypto VC firm Paradigm. That firm invested more than $250 million into FTX. Huang claimed SBF assured Paradigm the investment would be put into FTX and not Alameda. He also said he expressed concern around FTX lacking a board of directors. As we wrap up the first week of Sam Bankman-Fried's trial, let's continue our conversation with former federal prosecutor Paul Tuchmann. Crypto World's Talia Kaplan sat down with Tuchmann Wednesday, and in part 2 of the interview, he lays out possible defense strategies for Bankman-Fried's legal team.
If you were a prosecutor on this case, what would you be focused on? What would you be looking for, especially when trying to prove intent? I spoke with a crypto-focused attorney this week, and he mentioned that intent will likely be the core of this trial. First and foremost, do you agree with that statement? And also, what would you be looking for if you were, in fact, trying to prove intent?
Well, criminal intent is absolutely going to be probably the most important aspect of SBF's defense in this case. He is very likely to argue that whatever he may have done, and he may argue about why the things he did were not actually criminal, even if he was wrong about what he believed and what was criminal, that he had no intent to commit a crime, that he was always acting reasonably in support of the business, that to the extent that there were mistakes that he made, they were honest mistakes in an effort to build a business. Certainly that he was, at FTX was a sort of new and startup business in a new area, that there was a lot of gray area that perhaps he wasn't aware of what he could and couldn't do. And that therefore intent is absolutely going to be a very important part of his defense. As a prosecutor, certainly what one would do is, first of all, to the extent that you have cooperating witness testimony, and there are cooperating witnesses in this case, it may well be that the cooperating witnesses can give evidence of SBF's understanding and knowledge that what he did was criminal. One thing that they're also trying to introduce evidence of that I believe they'll be permitted is that SBF, as a sort of a matter of course, used instant messaging platforms where his communications would disappear after he made them, or that he would have things deleted. That tends to show that an argument is consciousness of guilt, that that's the reason why a person has communications or deletes their communications, because they don't want them to be found, because they know that what they're doing is wrong. Similarly, there is going to be a lot of evidence, documentary evidence, that presumably exists. There was discussion about hundreds of thousands, if not millions of pages of documents turned over in discovery in this case, because the government certainly had access to all of FTX's servers after the bankruptcy. So if there are emails between SBF and other people where it tends to show that he knew that he was doing something wrong, well, that's very useful evidence for the government to show criminal intent. So there's a lot of different potential ways that the government can do that, depending upon what the evidence is that they've found.
So you mentioned cooperating witnesses. Expanding on that, while SBF pleaded not guilty to the charges against him, his former colleagues and closest friends pleaded guilty to the charges against them, and they're now cooperating with prosecutors. They have been cooperating with prosecutors. Some of them are in fact expected to testify at the trial. Some of those key witnesses include Caroline Ellison, who was romantically linked to Sam Bankman-Fried. She also was the CEO of Alameda Research, the sister hedge fund of FTX, and Gary Wang, who was the co-founder of FTX. Those two are expected to testify. So how damaging can that testimony be to Sam Bankman-Fried in his case?
It's likely to be very, very damaging. These are people who were both in positions of high authority at the businesses that he was also running and the head of, and also people who were very close to him. And when those people are willing to say, I committed a crime, it gives them a certain measure of credibility with a jury if they say, I committed the crime together with or at the direction of SBF. Of course, in any case involving cooperating witnesses, there's going to be vigorous cross-examination by the defense of what their motives are. And depending upon how they do on cross-examination, they may well be discredited in many ways. It's very hard to get a jury to wrap its head around the idea, a lot of the time, that people who would admit their own guilt, right, in a particular scheme would not be telling the truth about that, right? Of course, people are very unlikely to say, yes, I committed a crime, if they did not themselves commit a crime. That really contradicts the good faith defense in a lot of ways, because it's pretty hard to argue that I, SBF, always acted in good faith and didn't know that what was going on at my company was criminal or wrong, when his most senior and trusted lieutenants are saying, not just one of them, not just two of them, but at least three of them are saying, yes, we were doing something that was wrong. So I think that is going to be a particular challenge for the defendant in this case.
You mentioned some of the defenses, but what are some of the other defenses you anticipate SBF's lawyers will try to mount?
One defense that they've said that they want to try and make is not exactly an advice of counsel defense, but it is similar to one in that it relates to the good faith, right? He is going to argue, or would like to argue, that many of the things that he did while he was at FTX were done with the involvement of legal counsel. Documents that he sought from FTX's former law firm or from FTX relating to that, the judge denied that request. So that makes it more difficult for him to mount that defense, because he doesn't have access to all of the documents that might show that there were attorneys who were involved or present when certain decisions were made. So that's going to make that more difficult. Another defense that he might try and mount is the idea that in the crypto space, particularly with exchanges, and specifically with exchanges that were based overseas, and it's an important point, the FTX exchange was based in the Bahamas. FTX had a sister exchange, FTX.US, which was based in the United States. The alleged theft from depositors or fraud on depositors in this case, it all relates to deposits in the FTX exchange in the Bahamas. And what SBF would like to argue is that for the FTX.US exchange, he wasn't allowed to move depositor money in certain ways. And one of the things he liked to argue is that he didn't, in fact, move the FTX.US depositors' money because he knew that regulations forbid him from doing that. By the same token, what I think he would also like to argue is, with respect to the funds that were deposited at the Bahamas FTX exchange, there were no such regulations. The idea being that if there weren't regulations, it was a gray area, and that he could use the money in the ways that he thought were permitted and did use them. And that the FTX depositors, for example, again, the Bahamas exchange depositors, there were terms of service that they had to agree to when they deposited their money, and that those terms of service, SBF would argue, permitted FTX to move the money in the way that it did. So that's another thing that they would like to argue. But that's also going to be difficult because of one of Judge Kaplan's pretrial rulings, which precluded and excluded an expert witness that SBF wanted to call to testify to talk about how there is a lack of regulation in the overseas cryptocurrency exchange space. And that would tend to show, according to SBF, that what he was doing with that money was something that was standard in the industry. But the judge said, no, I'm not going to allow you to do that. I'm not going to allow you to call that expert witness. And so he might try and do that with different witnesses. He might even try and testify himself, which of course is incredibly risky. But it just makes it more difficult to mount that kind of defense.
Tuchmann also discusses how long the trial could last and how many years SBF could serve behind bars if he's found guilty. You'll be able to watch the full interview on cnbc.com/cryptoworld. All right, that's all for this week. We'll be back on Monday with a lot more, and we'll see you then.